Thank you very much for the kind introduction. And good morning. And I'd like to first thank Petra and the EIOPA team for this kind invitation to provide the opening remarks for this year's EIOPA conference with a very timely theme: stronger, simpler, smarter insurance and pensions for the future. We know that a strong and stable insurance sector is a key to economic growth and societal resilience. And this is even more important in this period of rapidly evolving and interconnected trends and risks, from climate change to digital innovation that present far-reaching social challenges for all of us. Effective policyholder protection and the maintenance of financial stability remains the core mandate for the IAIS. And these are necessary conditions for the insurance sector to play its critical societal role. At the same time, with the role of insurance becoming increasingly relevant to broader policy objectives, insurance supervisors are also looking to play a more direct role in supporting the development of insurance markets, for example, to address protection gaps in a way that is sustainable and delivers value to customers. I can see from the conference program that these topics, including sound supervision for a strong insurance and pension sector, simpler savings and sustainable pensions, and a smarter digital transformation with AI, are also very much the focus of your discussions today. Over the next 10 minutes, I will provide you with an update of IAIS work on key reforms, most notably the Insurance Capital Standard, the ICS, also set out developments in the sector, including risk and supervisory responses, and briefly outline our 2025-2029 strategic plan, which charts the path for the IAIS to contribute to the opportunities and challenges facing the insurance sector in a rapidly changing environment. So let me first start off with a milestone development from the IAIS. As you know, ensuring the effective cross-border supervision of internationally active insurance groups is a critical part of our work, and there are 59 right now. In 2019, the IAIS completed the first phase by finalizing the qualitative element of the common framework for supervision of IAIGs, or we call it the COMFRAME. This year, we have been focused on finalizing the quantitative element of COMFRAME, namely the Global Insurance Capital Standard, or ICS. As I'm sure you all have seen by now, we have, and I'm very pleased to say, effectively crossed the finish line on this very important agenda. The IAIS Executive Committee has approved the final version of the ICS as a prescribed capital requirement for IAIGs. Arriving at this agreement is a monumental achievement for the IAIS and its members. It will enhance the effectiveness of global insurance supervision and strengthen the resilience of the global insurance sector. The ICS will be put forward for adoption by our members at the annual general meeting in Cape Town, 5th of December this year. When adopted, this will provide for a first time a common language for cross-border discussions on group solvency. The ICS will contribute significantly to the stability of insurance markets globally and reduce the proliferation of overlapping local practices in risk management. I would like to thank all members, and especially EIOPA, for their continued constructive collaboration on this very long but important journey. IAIS members across the globe are committed to implement the ICS, and several members are already taking steps to embed it in their regulatory regimes, including in my own jurisdiction. At the same time, our executive committee has also completed the assessment of whether the aggregation method, or the AM, developed by the United States provides comparable outcomes to the ICS. In finalizing the comparability assessment, the IAIS has concluded that the US AM provides a basis for implementation of the ICS to produce comparable outcomes. The comparability assessment of the provisional AM has highlighted some areas where work as part of the implementation of the final AM will help ensure convergence, specifically 2 points: treatment of interest rate risks and appropriate timing of supervisory intervention. In using the final AM as its implementation of the ICS, the US commits to addressing those areas in appropriate ways, which will be reviewed during the IAIS ICS implementation assessment process. The IAIS has also published a report on the AM comparability assessment, and if you can take a look, it's quite extensive. And this provides more details on the area that were assessed as providing comparable outcomes, and in some circumstances, divergent outcomes where work as part of the implementation of the final AM will help ensure convergence with the ICS. As the final AM will be the US implementation of the ICS, the assessment of its implementation will be subject to a consistent methodology and the same timing as ICS implementation assessments in other jurisdictions. Second, let me turn to another core IAIS contribution to supporting a strong and stable insurance sector. We do this through identifying, assessing, and addressing global insurance market developments with a macroprudential surveillance and coordinated macroprudential policy measures. As you know, in 2019, the IAIS finalized its holistic framework for the assessment and mitigation of potential systemic risk in the insurance sector. Since then, this proved incredibly effective in supporting a coordinated supervisory response to global challenges that requires a global response. Through the IAIS annual global monitoring exercise, what we call the GME, which is a key element of the holistic framework, we have significantly improved our ability to identify and monitor risks in the insurance sector. Coupled with macroprudential policy measures, the GME provides a strong yet flexible framework that supports the supervisory community to assess and address both inward and outward financial stability risks. Our GME provides an important empirical basis covering more than 90% of world written premiums. We have also assessed the comprehensive and consistent implementation of the holistic framework supervisory policy measures across major insurance markets. There has been significant advances made by supervisors in strengthening the macroprudential surveillance and enhancing their corresponding macroprudential toolbox. These have significantly contributed to the continued overall resilience of the sector, considering the series of challenging external events and macroeconomic uncertainty we have faced over the past years. But the IAIS cannot be complacent. We continue to monitor key risks and trends with our own GME and ensure that the tools available to supervisors are up to the task. We will publish a detailed analysis in our 2024 GMAW in December. Currently, there are two sector-wide themes risk themes that demand our focus. The first theme focuses on how the insurance sector is managing the complexities of the fluctuating interest rates, ensuring adequate liquidity to meet obligations, and managing credit risks. Key areas of insurer and supervisory attention relate to, for example, surrender risks, debt sustainability of fixed income assets, risk related to CRE exposures, the impact of derivatives and margin calls, the implications of AI digitalization, and the transmission channels from geopolitical risks. Our second theme covers the structural shifts in the life insurance sector, focusing on two critical areas. First of all, the growing allocation of capital by insurers to alternative assets, and second, the increased use of cross-border asset-intensive reinsurance. The trend towards higher investment in alternative assets has persisted despite higher interest rate environment, indicating that interest rates are not the sole factor driving these developments. Although the overall insurance sector exposure to alternative assets is quite limited, some insurers have significantly higher allocations in pursuit of higher yields. These assets provide diversification benefits and may enhance the matching of their alternative assets to long-term illiquid liabilities. However, key supervisory concerns could include discretionary valuation, liquidity risks, hidden leverage, and credit risks. In reaction, supervisors are conducting stress testing, performing thematic reviews, implementing guidelines for macroprudential supervision, and assessing valuation methodologies. The use of cross-border asset-intensive reinsurance agreements is also increasing. These agreements transfer both investment and biometric risks associated with long-term life liabilities. Asset-intensive insurance transactions are expected to grow, driven by potential factors such as interest rates, credit spreads, pension reforms, and demographic changes. Supervisory concerns could include whether these transactions are potentially driven by regulatory differences, concentration risks in the jurisdiction and reinsurer level, the increasing complexity of these types of reinsurance agreements, and conflict of interest. The potential procyclicality of recapture triggers and potential high levels of risk concentration in a few reinsurers and jurisdictions are being closely monitored as well. The IAIS has been assessing the key risk and supervisory measures related to these structural shifts, actually since 2020. Highlights of this work had been laid out in our GMARS and reported to the Financial Stability Board. We are currently developing an issues paper that will provide an in-depth assessment of the key supervisory issues and practices in response to these structural shifts. This issue paper will inform enhancements to the IAIS supervisory and supporting material where necessary to ensure a globally coordinated supervisory response. Public consultation is scheduled for March 2025. Third, let me talk about our strategic plan. Looking ahead, let me start by highlighting that the challenges and the opportunities currently affecting the global insurance sector, and therefore also insurance supervision, are increasingly interconnected. Global and regional and local trends are intertwined, particularly in periods of turbulence, such as those caused by geopolitical tensions and macroeconomic imbalances. This is much reflected in our new IAIS Strategic Plan 2025 to 2029, which we published at the end of October. I will only briefly outline our strategic priorities now, as I will get a chance to discuss these in greater detail in our conversation later this morning. But let me first thank all our members and stakeholders who have actively contributed to their collaborative effort in bringing together our new strategic plan. It comes as no surprise that two of our key strategic themes cover, firstly, strengthening the supervisory response to climate change, and secondly, supporting adaptation to increasing digital innovation and cyber risks. Our third and final strategic theme, which is supporting insurance to serve its critical societal purpose of building resilience, speaks to how insurance supervisors play an important role in supporting and indeed shepherding insurers to deliver on their societal purpose, and includes a multitude of complex topics which will require a sort of a multi-stakeholder approach to address. One of the critical issues we are faced with are natural catastrophe protection gaps, or NatCat protection gaps, as we call it. As this theme goes beyond the scope of traditional insurance supervision and touches broader public policy objectives, we will also look to expand our engagement with policymakers. And after assuming my role as a chair, I have been very much emphasizing the importance to engage with policyholders, given the societal role of the insurance sector and its wider societal and political implications in general. We will also, the recent examples of our successful collaboration in this regard is our joint work, first of all, with the IMF, for example, on the high-level panel on protection gaps as part of the IMF annual meetings, which we held last month. And I think this is the first of the kind that we have collaborated with the IMF to discuss the issue of protection gap. Second, we work with the OECD to support G7 publication of a high-level framework for public-private insurance programs against natural hazards. This actually has stemmed from our paper issued last November about the supervisor's role in addressing NatCat protection gap. So it has been building on at the G7 forum so far. We will also start our own work in the 2025 GMAR Special Topic Edition on the potential financial stability impact of NatCat protection gap. And we will also be happy to support the G20 South African presidency should they be interested in this topic as well. Let me conclude. Although we have come a long way in enhancing global insurance supervision and standards, we cannot be complacent to the increasingly intertwined emerging risks on the horizon. What I hope to have left with you this morning is to remind ourselves that we need a global response to tackle some of the most pressing issues that we are faced with. What we are faced with is climate change. What we are faced with is digital innovation. And what we are faced with is societal challenges regarding societal resilience. And these are not jurisdictional specific. They are actually something that is a global challenge. And this, of course, needs a global response. Of course, these are times of geopolitics, and sometimes it might be difficult or it might be challenging for us to collaborate and cooperate. But I think we should all remind ourselves that we need to work together in order to address these challenges. Whatever the environment may be, and it may be tougher, of course, but I would always think that it would be important, and I think European colleagues have always have that kind of a thinking in terms of approaching these financial stability and society challenges that lie ahead of us. I look forward to continuing the discussion later this morning. Thank you very much for your attention.